2025 is shaping up to be a massive year for Hyperliquid. It stands at the epicenter of two of the biggest trends in crypto. In this video, I'm going to break down what those trends are and how Hyperliquid is capitalizing on them. Before I get started, remember that nothing I say in this video is a financial advice or suggestion of an investment. You should still do your own research, of which this video can be an important part. Now let's get into it. Before I get started, I want to share that I actually talked about Hyperliquid over a year ago in my newsletter, January 2024. That's 2024, not 2025, as an airdrop that you should be farming. So if you want to learn about things literally more than a year ahead of time, check it out, newsletter.dynamodefi.com. We also have in there a free guide how to use Hyperliquid that I'll link in the description, and then a valuation framework for Hyperliquid's Hype token itself. I also have another video I made fully breaking down what Hyperliquid is a month ago that I'll link down below. And what are those trends I was referring to that Hyperliquid stands poised to capitalize on? The first is the shift from centralized exchanges to decentralized exchanges in perps trading. Here is the perps volume on decentralized perp exchanges. And you can see that it hit an all-time high in January at $375 billion. Compare this even to the peak of 2021, which barely cracked $100 billion. So we've got a 3x from the prior bull run, which saw significantly more retail piling in. And if you actually look at the top DEXs taking place on, Hyperliquid is by far the largest one. In fact, it's the largest by a factor of 10x over the number 2 in the past 7 days. So you've got a massive trend, and Hyperliquid is the clear leader in terms of actual usage. Another benefit of Hyperliquid is that they've been very, very fast to list things and respond to new trends in the industry. Here you can see they launched leveraged perps on Cato just a few days after it actually went live. So speed is everything, and Hyperliquid certainly seems to have speed and execution. And then if we jump over to the volume on Hyperliquid itself, we can see that it had its best week ever in January, although with the market cooling off, it has retraced since then. But I think what's really important is not necessarily the volume on Hyperliquid week to week. What's important is the larger trend, and the larger trend is volume shifting from centralized exchanges to decentralized exchanges. Here we have the ratio of decentralized exchange to centralized exchange futures trading volume. So we can see, for example, at its low in June 2022, just under 1% was traded on decentralized exchanges. At its peak from the prior bull market in February 2022, it was just under 3% traded. All right, so fast forward a few years, we were looking at 4 to 5% last year. And then in February so far, which is almost over, we're looking at over 7%. And remember, most of this is happening on Hyperliquid. So Hyperliquid is both a beneficiary of and also a driver of this trend. And why might people be shifting to decentralized exchanges, you may ask? One is that in general, the infrastructure and user experience for using things on chain has gotten significantly better. It's easier to on-ramp, easier to off-ramp. Wallets are more intuitive than they used to be. A lot of things you used to have to do manually can now be abstracted away. But another thing is that once you're on chain, for example, people who are trading meme coins, people who have come on for any of various narratives like DeFi or NFTs over the years, it's oftentimes easier to take your funds and trade them on chain rather than having to deposit them to an exchange, because on chain, as long as they're in your wallet, you can use them. You don't have to worry about which funds are on which exchanges. And then moreover, you have the security issues. And we saw that firsthand this week when Bybit, one of the largest platforms for trading perps on a centralized exchange, was hacked for $1.5 billion worth of Ethereum. This is not only the largest crypto hack in history, it's the largest hack in history, and by some measurements, the largest theft in history. So centralized exchanges can be hacked, and they can sometimes be hacked for a lot. That's not to say that DeFi doesn't have risks, because it absolutely does. But think of some of these things that have happened over the past few years. You had FTX, you had Celsius, now you have Bybit. There is a history of major losses happening on centralized exchanges. and DEX's promise to fix that issue. And then the other trend that Hyperliquid stands to benefit from is the shift towards alternative layer 1s with high throughput. If you look at the trend in DeFi usage and total value locked, aka deposits, over the past year, then you see this blue bar that's going down. That is Ethereum. And then you have the rise of other chains like Solana, which many of you may use. You have Base, which is not a layer 1, it's a layer 2, but it's also extremely fast and cheap. You have the growth of Sui, Aptos, Sonic, Berachain. Basically, you have this growing market share among these alternative layer 1s, and Hyperliquid is now also its own layer 1 with the HyperEVM. You can see here some details. Its blocks are built as part of L1 execution, inheriting all security from their HyperBFT consensus. Some other details about transitioning the Hype from their exchange to being a native gas token. But basically, the important thing you need to know is that this HyperEVM is taking that token value that they've created from this huge Perp DEX, and now they're using that token value to secure their own layer 1 where other DeFi applications will launch. And I think that Hyperliquid actually has a good chance of succeeding because they've already done the tough part. They've already onboarded people. And not only that, they've already built a valuable token. So there's already a lot of liquidity that's sitting in their ecosystem just waiting to be deployed. That isn't to say that Hyperliquid is without risk, however. One risk that I want to call out is that if you actually look at its market cap and fully diluted valuation, first off, there is dilution to come in the future. The FDV is around 3x the market cap, which is a non-trivial difference. But I think equally important, the FDV is relatively high. If you look at some comps, you look at the highest FDV projects, then you can see that Hyperliquid right now is just above Tron. And it's around, it would have to grow 50% to be matching Sui and Cardano, other layer 1s. And so, the issue there is, all right, so Hyperliquid's built this great Perp DEX, they're building this layer 1, but how high could it go to really change in a meaningful way, say grow several multiples? It would have to start to approach the FDV of Binance itself. Even a 2x would put its FDV just under half of Binance's, and Binance also, of course, is the most used exchange in the world, and they have one of the most used layer 1s in the Binance Smart Chain. That isn't to say that Hyperliquid can't get there, but Binance has a bit of a head start and is one of the premier crypto assets. In the meantime, however, sometimes FDVs can far outrun what would be rational, especially if the market cap itself is lower, and the market cap itself is perhaps placed much more reasonably with room to grow, where it's at a modest rank 26 on CoinGecko. And so there's many tokens above it here that it could double, triple, quadruple, and be compared to. If you want YouTube to show you more videos like this one, be sure to like and subscribe. And until next time, this is Dynamo DeFi.